Welcome everyone, my name is Lauren Glover. I am on the marketing team at TrueAccord, and welcome to Scaling Digital Collections in 2021 without compromising the consumer experience. So, is it possible to scale quickly while prioritizing the consumer experience? I'm sure this is the question that brought many of you here today. Those of you who want to grow your collections and recovery operations especially, all while keeping consumers at the very center of how you do business, especially in this year where we're coming off of a very unprecedented time. So we're going to be digging into this question today, and we are so lucky and thrilled to have two fintech veterans leading this conversation from Affirm and TrueAccord. So we're going to get right to the good stuff. Before we get started, I'll run you through our agenda and also do a little bit of housekeeping. So, what's on deck for today? First, we're going to do some quick introductions, and we're going to talk about the digital payments and collections landscape. What are the big forces at play in this moment, and especially why is scaling so important right now? Then we're going to talk about Affirm's story and how they've been able to scale rapidly, especially in this past year, without sacrificing consumer experience. Then we're going to go into a fireside chat with both of our speakers, and the goal there is to leave you with some really actionable insights when you're thinking about growing your own best-in-class digital collections operations, making sure that you can grow while keeping consumers at the center of your business. We're also going to have time for a really robust Q&A today. So I'm sure you all have been on Zoom a lot before, but as a reminder, you can submit questions both via the Q&A function that's at the bottom of the screen and also in the chat. So get your questions ready. Feel free to submit them at any point during the conversation, and at the end we'll really have time to have some interactivity between the speakers and your questions. So let's get going. So who are our speakers today? We're so thrilled to be joined by Sahil Bakshi, the Senior Manager of Growth Analytics at Affirm, and Ohad Samet, the CEO and co-founder of TrueAccord. We're going to kick things off today by going to you, Ohad, and I want to talk about the big landscape that we are in right now, the big picture. So many of our audience joined today because scaling is incredibly relevant to them, and they are in, they work at a lending organization, they work in fintech broadly. What do you attribute to that immense growth to?
Here's what we're seeing. First of all, last year, as everyone was sheltering in place, we've seen a tremendous shift to online purchases. So, and that trend will continue. Maybe it will abate a little bit because people are going to leave home and they're going to go to meet other people in the real world, as we all want to do. But it's definitely has made a significant shift, and that means moving a lot more activity online, which is very relevant for the vast majority of our clients and prospects and partners and so on. The other element is that because of sheltering in place and the various stimulus packages from the government, we've seen a drop in overall credit utilization, to the extent that credit card balances, I believe, dropped about 10% year over year, which is unprecedented. Now, it's only started and accelerating, but as consumers go back to real life, to physical locations, go back to spending, go out of sheltering in place, increasing their confidence, their financial confidence, we're seeing the emergence of a re-leveraging of the American public. And in that regard, it's not alarmist to say if we only normalize to similar levels that we've seen pre-COVID, the absolute number of, first of all, we're going to see a lot more borrowing, right? So across the board, a lot more borrowing, no matter what the product is. And for the next 6 to 12 months, every consumer lender, I believe, is going to be running as fast as it can and not catching up with demand, because it's going to be pretty insane. And beyond that, on collections and recoveries, one, even if default rates remain low, but credit utilization grows, we're going to see a significant growth in absolute number of defaults and absolute number of accounts that need help. If they also normalize to pre-COVID default rates, we're talking about almost doubling. That's a huge volume. And together with, if you're call center based and you have 75% to 100% turnover annually, which is not uncommon for a collections call center, and you're starting to be faced with growing cost of labor because of the pressure on compensation, that becomes another challenge in scaling. So I think all of these together, increased demand, increased defaults, the labor market, and so on. It's like a perfect storm that makes what we're talking about today very topical, very relevant.
Great. Yeah, thank you for that, Ohad. Yeah, that is a perfect storm. So I feel like I want to transition to Sahil and the story of Affirm, because Affirm has been at the center of that perfect storm in many ways. So Sahil, I'm gonna turn it over to you. I'm hoping you can start us off by introducing yourself a bit more. So you're the Senior Manager of Growth Analytics at Affirm. So if you can tell us a bit about that position, what are your key concerns, and what specific analytics are you looking at on a day-to-day basis?
Yeah, here at Affirm, I'm focused essentially on understanding our users end to end. So one of the things that we're focused on is through the entire life cycle of our users when they first start using Affirm, all the way through the time that they're transacting with Affirm's products, taking up additional loans, and of course, being serviced, whether that's through actually helping them understand how Affirm works or answering their questions, all the way through ensuring that they're making their payments on time. And when they go delinquent, actually making sure that we're allowing our customers to understand, when, why, how, giving them the tools and the ability to come back in good standing. I think these are all actually very tied aspects. I think oftentimes folks look at just the acquisition funnel or just the growth funnel, but don't really tie the whole thing together, which is kind of what my team at Affirm is focused on, is just understanding our users end to end. And we work closely with our operations team in understanding, once customers do default, what happens. Really, the journey through even defaulting and onward is all part of your journey as a customer with the products you purchase. So we sort of look at analytics across the entire funnel end to end, and try to understand what our customers are looking for and need, and try to improve both their experience and then the experience that Affirm can offer.
That's really interesting. Thank you for sharing. I'm particularly interested in this idea that that maybe the consumer journey it's bigger than a lot of people maybe conceptualize it, right? And if you look at the whole consumer journey through through default, what can you leverage to help not leave those consumers behind and bring them back? So I'm wondering if you can speak specifically to Affirm's growth. I mean, you've been there at a time during tremendous growth. And so what are some of the factors that have enabled Affirm to scale so quickly?
Yeah, I mean, apart from, I think, teams that are just really focused on ensuring that our customers are getting the best experience that we can provide, which across product engineering, operations, credit, and all the various teams we have. I think one thing that we've done through this period that I can highlight is we really try to look at our users from the perspective of the full consumer. I think in lending, the margins are tight, right? I think we all know that those of us who are actually lending are working through finer margins, and oftentimes that encourages you to make decisions on an individual loan. I think one thing that we've done here at Affirm and tried to put a bigger focus on is not just the loan that you're lending, but rather the entire customer. And so whether that's through credit decisioning and understanding, okay, like what do we think this user can go on to do, through our servicing strategy, which is, I would say, one of the things that we've tried to understand is we're not just servicing the customer's loan, we're actually servicing everything that they do beyond that. And so the tooling, the capabilities that we're building, the enhancements that we make, try to take all that into consideration. And what that allows you to do, I think that based on what we've seen, is one, it does allow you to manage your margins well, and it does allow you to scale, but it also does so in a way that actually allows the consumer to receive the tooling and the experience that they need to be successful with the products that they're actually buying through Affirm. And so by doing that, I think it's allowed us to actually look a little bit more holistically at the user. A part of that is actually understanding, when users start off at a certain product and then they go on to take different products, what are those? What happens? What happens to their delinquency journey? What happens to their actual life cycle journey, to their take-up journey? And through all of that, we try to use all of that in making the decisions that we make. And ultimately, we find that through that lens, you are actually improving both your margins and the experience for the user.
Thank you for sharing that. It's a very interesting story. And in fact, Ohad, I think that, I know this from previous conversations that in hearing that story, that is sort of very much related to the origin story of TrueAccord. Can you share that, the connection there about looking at the holistic consumer and, how you can build, better products for a fuller consumer journey?
Yeah, absolutely. So prior to starting TrueAccord, I was chief risk officer for Klarna. At the time, only Europe, but underwriting a few billions of dollars a year in loans, basically. And having been traditionally, or like earlier in my career, a data science guy, mostly focused on underwriting, fraud prevention, and so on, I've been very fixated on making the decision in real time. Is this fraud or not? Should this transaction go through? Should we underwrite this consumer or not? And I realized that, unlike fraud, where you're working against an adversary, if it's fraud, then it's fraud. Data challenges aside, in lending, the condition of the consumer, like financial condition, financial situation of the consumer, can change over time. It's also a matter of stability or instability. And so my eyes were open to, you could make, if your underwriting model is incorrect, or you made a mistake, or there's suddenly a new merchant that introduces a new flow from a completely different type of consumer that you don't really score correctly, and you approve too many people, you approve the wrong population, it doesn't stop there. You can actually actively engage with the consumer throughout the life cycle to account for whatever change in their life, whatever change in your situation or in your decision making, and you correct for that. And when I say correct for that, I mean literally, like I said, work with people to help them figure out how to actually repay and how to come back. Companies like Affirm understand something very basic. If you are only lending money, if that's all you do, you're a commoditized business. Lending is a low frequency product, low margin. It's all about pricing. Consumers will flow to whatever gives them the lowest APR and lowest friction. But if you use a holistic view of the consumer lifecycle and you start relying on brand, and you start relying on how you actually help the consumer think about their overall financial lives, you create something a lot more valuable. You create one strong brand affinity, and I gotta tell you, in a lending business, we're seeing that similar, identical businesses from a product and go-to-market perspective, the one with the better brand affinity is going to collect more from consumers in trouble, because consumers literally say, I want to pay these people first, I want to go back to working with them. And two, to that point, focusing on the reacquisition post-repayment, which is something that many traditional financial institutions don't think about and don't even understand, like from a cultural DNA perspective, is a strong differentiator, and allowing a firm to not only acquire consumers, but retain a long-term relationship with them through changes in their financial lives. And that is a perspective that I've seen at Klarna, and I see that from Affirm and from other leaders. It's a standout, and I think that's why Affirm succeeds the way it does.
Yeah, that's super interesting. And also just, I always, the idea of, the importance of brand and brand trust, that's really a newer idea for the collections and recovery space. So thank you for sharing those both. I feel like that we gave our audience a bit of, Affirm and TrueAccord's, stories and their ethos. I want to transition into the fireside chat portion of our webinar. I make that joke in every webinar. I hope you're all not sick of it yet. But I really want to, this section is really meant to give our audience some more tools to walk away with, some more questions to consider as they are thinking about scaling, especially scaling collections and recovery operations. So I want to, bring both of you into this part of the conversation. I'm going to start off by talking about, common pain points for companies in the digital payments and collection space. How, and especially the pain points in this moment in 2021, and how you see either your own companies getting through those pain points and what strategies they're using. And maybe Sahil, we can start with you, and then Ohad, feel free to jump in.
Yeah, I think going back to the scaling question, actually, I think these are very related. So the reason why I think they're very related is, as a business or as an organization, there's two things you're trying to straddle. One is you're trying to ensure that your customers are paying you back, that you're able to collect as much as you can, and that your customers are coming back into good standing. That's number one. But the second thing that you're trying to do also is do this efficiently. So from your sort of like internal portfolio perspective, you're looking at this going, okay, how do I get this in the most efficient way possible so that we maintain, decent margins in our book? And I think the third aspect of that, which is probably the most difficult, is how do you do this while making sure that your customers are actually feeling like they're heard, or that they're actually getting the tools or the ability to get back to good standing. And I think, like, going back to the question, I think here, one of the things that we've done is tried to understand across the various, sort of modes of communication with our users, which ones they respond to the most, whether that's through testing or understanding how our users interact with the firm, all the way through looking at actual performance. We try to evaluate where our customers are most effective, where we're most effective with our customers, and from there try to understand the various channels and be as efficient as possible while maintaining costs. I think the hardest part about this is you can go back and look at this and say, well, we should offer all these sort of modes of communication to our users, and that'll reach 100% of them. But really, what you're trying to do is be as efficient as possible. So for the users that prefer, being called to, you want to make sure that you at least have that offering. For the users that you think respond better to your digital communications, you need to make sure that's available. You want to offer it to those users that need it, and not necessarily everything to everyone. And that way, you're actually efficient. So something we do at a firm is actually look across all of our channels, and I think that's part of where we found a really good relationship with TrueAccord, is that I think they understand sort of the same thing, and it's actually been really useful for our users. And so, kind of stepping back, you have to look at everything.
Yeah, that's interesting. Ohad, can you speak to that, and how TrueAccord thinks about balancing efficiency while also making sure we're meeting consumers where they want to be met?
Yeah, a lot of things here. So first, the thing that I like the most is waking up in the morning, going to our Slack and looking at our True Compliments channel. This is where we get all the love letters, quote unquote love letters from consumers, thanking us for the service and what you did for them and the empathy and so on. And the thing I like the most is when they thank an agent by name, and that agent is actually a virtual agent, not someone not an actual person. Because to me, this is a triumph of the evolution of technology over time. You can offer empathy at scale for consumers across channels, their channel of choice. Danny Kahneman was a Nobel award-winning economist and psychologist, is publishing a book now called Noise, talking about how human decision-making varies. And he's talking about variability in human decisions. And he's saying variability among people in the exact same role who are supposed to make the exact same decisions can be as much as 50 to 60%. And when you think about that, how that scales to a large call center for people who are supposed to offer consistent treatment to your consumers, that is pretty bad, right? And so machine learning is actually very good at taking data, looking at historical data. At this point, we service about 7 million active accounts, almost 20 million accounts historically. And it's very good at looking historically at what has worked and what hasn't worked, and offering consistent data-driven treatment that actually works for consumers. And the other element here is that sometimes when people say machine learning, they actually mean a bunch of rules, right? That's not what we do. And sometimes when people say machine learning, they also mean we'll score the consumer when we see them the first time, and that will mean some kind of a predefined process. And for us, that is not true either. Every action from the consumer warrants a different potential treatment, a pivot to a new channel, a pivot to a new content, a pivot to a new payment offer, to a new agent name. That creates a kind of a choose your own adventure situation that again reacts to the consumer. And on the cost side, I can tell you that, we definitely look at cost, but in general, consumers just want to communicate digitally. So we don't see a large segment of people like, no, send me a letter. If the option to be on your phone, customize your payment plan, move your payments around, which is exactly what we offer, with 85% of our traffic from mobile devices and tablets, people are going to take that.
Yeah, and I think
Go ahead, Sal.
The one thing that Ohad mentioned that I think is important is in all of this, you have to understand your users really well. So whether it's through machine learning and you sort of like using data that you have, what it tells you is what your customers are responding to. And I think it's really important to realize that you're not just collecting on a user, you're actually interacting with a person who is trying to make their payments. And so the solutions that you come up with, the models that you create, you sort of have to realize that that's the case. And so even as you build your content, as I'm sure Truecore does, that's taken into consideration. And that's actually what sort of allows you to maximize your models or maximize your solutions.
Yeah, is that holistic view. That's very interesting. So Sahil, I want to turn to you for the next question, and then Ohad, I'd love you to jump in. But I want to particularly talk to questions that our audience might have that they're trying to scale their collections, and they've sort of reached this point where they realize they need to partner, right? They realize they need to partner with someone who is able to just take things to the next level in terms of data, in terms of machine learning, and so. Sahil, I know that Affirm works with TrueAccord, and you've been through that process of partnering on collections. And how do you think about what are the most important questions you should be asking when you're thinking about bringing in a vendor or a partner to help you scale?
Yeah, so I think there's a few things. I think one of the things is probably standard that a lot of us do, which is as we look at our vendors, we evaluate, okay, which ones are going to provide us the best performance, which will improve our collection rates or recovery rates or whatever metrics you look at. And you evaluate the vendors and you say here's the rough cost and here's the rough return we'll get, and then you stack rank them. I think that's sort of like the pure analytical approach. But I think there's a couple more aspects to this that I think are really important. One is actually understanding that the solutions fit for your customer base. So working with the potential vendor and asking them, what type of customers do you service? What type of accounts do you service? How do you do that? What does that make up? What kind of data can you provide to us that can help us work together with you? I think one thing that TrueAccord does well, we do well together is they're constantly asking us, okay, what kind of information can you provide us as well that can make our solutions better, and then vice versa. And I think the last thing, which often I think in my experience is forgotten, is how is the solution true to your values as a company? So as we look at Affirm and we see some of the things that are most important to us, the vendors that we're looking at, do they fit that mode? Are they also in line with the values that we think are the most important? And I think that one ends up being really, really important, because otherwise you're looking at a list of solutions and you're valuing them across that. And you may find that there's competitors or there's folks that do similar things. From the outside perspective, you don't necessarily know which one is going to be the best. You can vet the most you can do. You can look at integration. You can look at all these different things. But ultimately, the thing that sort of tie breaks and helps you really understand is how they fit your culture and as your solution as a company.
That's great. Thank you. Ohad, anything to add there?
I think what Sahil is describing and what we're trying to adopt here is just bringing the same practices from technology and product-driven companies to the collection space. When I was running risk for Klarna, I asked for advice from a senior banking executive about collections, and he said, listen, collections, it's more art than science. You hire people, you fire bottom performing 15% of agents every quarter, and you don't know why they're doing well. And that actually triggered my spidey sense on machine learning, because whenever somebody says only humans can do this and we don't exactly know why, I'm like, there's a subject matter expert-based machine learning system here somewhere. And that's exactly it, right? You bring the same, what are the jobs to be done? You consumer, what is it that you need? Why are you in debt? What's going to help you get out of it, right? And you discover that why people prioritize certain debts, what type of trauma puts them in debt. You discover again that having that brand association of, I like these guys, I like TrueAccord, and therefore when I have this marginal dollar, I'm going to pay them first, is a very strong motivator, even in collections. We think of our activity as kind of a specialized e-commerce situation, right? We are selling a way to repay your debt. And that's why the partnership has been so effective with Affirm, because they think about it in exactly the same way.
Yeah, and I'll add one thing for for all of us that are figuring out how we get more insight into our customers, just looking at collections and sort of repayments by itself is useful, but also as you survey your customers and you get feedback around what they think works, if they're having issues making payments, understanding why, and actually tying all of that together is also really useful, because you end up finding insight across the journey. And it's something that we do. Our operations and our servicing teams are constantly surveying our customers, and we read through them and we understand. And it gives us insight not just into like how we better service them through our channels, help center, all the channels we have available, but also even through our repayment, collections, recoveries, flows.
Great, thanks for sharing that. I want to before we move on, I want to give the audience some, a sort of summation of what we just talked about. And so, Sahil, thank you for posing these really good questions. I think it's I think that the key to scaling for a lot of organizations is going to be partnering, bringing in a vendor. And so thinking about, customer base, the data that's used, what treatments are used, getting very specific about that, making sure that, that as Ohad said, that what they're calling machine learning isn't just, rules-based, but is more a holistic look at how, creates this choose your own adventure scenario where it's individual for each consumer, but then also the importance of ethos. I think that's a really good thing to walk away from this session today with. So we're coming into the Q&A portion, and we've got some really, really great questions. So I'm going to start with, let's start with Edward. Thank you for this question. Edward asked, how can we drill in, or he wants to drill into the reacquisition in the collection space a bit more. And how does this fit into a loan program? So I don't know which one of you wants to take that. Ohad.
I can start, maybe Sahil wants to continue. Look, the old paradigm of lending is if a consumer can't pay me, they're not a customer anymore, and I need to get rid of them. And not only do I need to get rid of them, I don't exactly care about what happens to them with the collection agency. Just be compliant and get me paid. Not a great paradigm, and that's changing. So forward-thinking clients know that there is a point, actually a little bit before they're done paying, where you can basically say, you can give the carrot and say, hey, if you pay this down, you can reapply, right? Give that light at the end of the tunnel, and we tie the end of that cycle back into the beginning. And we're doing more and more of that with our clients. We want to, again, going back to the e-commerce analogy, right? This is an upsell at the end of buying a different product. So think about the upsell and connect to that, because the consumers, when they have the brand affinity that they have with a firm, they want the product, they want the service, they want to be back to the relationship.
Yeah, I totally agree. I think stepping back, there's a couple of things I can add. One is, when you take out a loan, this is one instance of doing so in your entire life of purchasing items. And so to say that you're closed off just because of one incident is short-sighted in that sense. So we try to look at our customers. We try to see the ones that pay back, and one, encourage them to do so. But two, once they do so, they're still a customer of a firm. They're a former customer, and maybe they're a future customer. And so we try to keep that into account. The second thing I'll add is that, if you look at the past year, with sort of like the unfortunate events that's happened, that could affect someone's ability. That could affect someone's ability to pay you back. That could affect someone's ability to interact with you. And so when you look back at that, you try to understand why that happened and what customers were affected in what ways, and actually keep that into account for future decisioning. I think it's something that we've done consistently over the last year, is understand either through proactive reaching out to our customers, or through understanding how we furnish customers, or through understanding what they're doing during the situation, through offering payment deferrals and other sort of tools. It allows your customers to understand. It allows you to understand what's happening to your customers and why, and actually making sure they're not just a customer for one purchase or for a couple of loans, after which you evaluate their risk as too risky. I think we sort of understand how you encourage them to come back.
Love that. Thank you. Here's another question from the audience. They say, I work with a lot of third parties that I have to go through small claims court to get payments. I hate this part of my job. How can I prevent this from happening and collect earlier?
Sure. I don't know the specific situation, but I will tell you that have to is sometimes debatable. Do we have to, or is that the process? I can tell you that we work with some of the largest debt buyers in the country. And when we've been able, in partnership with them, to significantly reduce, or they've been able to significantly reduce their legal program. Why? When you focus on jobs to be done with the consumer and better UX, it turns out that there's a lot more cooperation. By the way, what comes hand in hand with that? Lower complaint rates, less lawsuits, less legal issues. Because again, the consumers feel that they are in control because they feel that they have the customization and their journey. They feel that you work with them, and that reduces a lot of friction. And my first question would be, do you really need, if you had this type of technology, if you had that type of personalization, could you cut your small claims court cases by 50%, by 90%? It is possible.
Yeah, I mean, this is maybe a little bit easier on the sort of like more digital mode, but one thing that you can do and that we do is constantly test. So how do you add additional communication sooner? How do you tailor the messaging to our users? How do you understand, at what point you think is an indication that that they're going to go further into delinquency? And by doing that, it allows us to reach out to our customers sooner through different channels, so you can get some effectiveness from there. And I think at some point, you sort of look back and say, is the process that you currently have in place worth it? And that's another thing that I think we look at, which I don't know, I could probably add some more to, but.
Yeah, 100%. And by the way, a related question here from Connor Cronk is, how does Engage fit into the mission of providing for the consumer? It's all related. If we think of the repayment process as an e-commerce process, right? When you look at Amazon, a lot of people talk about Amazon Prime as a great product innovation, which is true. But before that, Amazon had something else, and that is related items. People who bought this also bought that. Right? People who bought this camera also bought the strap. People who bought the strap also bought this case. What Engage does is it allows consumers who are in the zone of repaying for their debt to say, hey, I like the experience for this debt. I have 3 other debts with other creditors. I want to pay them. I'm already on my phone. Okay, let's pull my credit report. Let's see what's going on. Let's make a plan. It is capturing purchase intent, right? The intent to pay for your debt for everyone else. So we're trying to tap into the network effects of finding consumers who are working on their financial fitness and enabling them. It works for the consumer. It also works for the clients.
Ohad, for those on the call who may not know what Engage is, can you zoom out and give a little overview?
Oh yeah, absolutely. So I'm CEO of TrueAccord Group, right? TrueAccord Corp, the collection servicer, is one of our entities. The other one is True Life Solutions. It offers TrueAccord Engage, which is a direct-to-consumer product that allows consumers to pull their credit report and manage their overall debt load, offer payment arrangements to their clients. More than 85% of their actions on the platform are actually offering payment arrangements to other clients. And it's part of our overall mission to just revolutionize, again, the whole life cycle. To Sahil's point, it's not only about that one debt, you have to think about the overall debt load of the consumer.
Great, thank you. Thank you so much. There's a great question here about Affirm and TrueAccord's relationship. I don't know, Sahil, you want to speak to that? And also the larger question of, why did Affirm choose to outsource?
Yeah, so we haven't had a partnership since day one. I think it started well a few years into Affirm's journey as a lender. I think we have gone through different solutions. So I think there's sort of 2 aspects. There's the pre-charge-off world and the post-charge-off world, at least at Affirm. In the pre-charge-off world, most of this has been done internally, either through comms, through our users, through SMS, through emailing, those channels. We largely outsource our phone calling efforts pre-charge off, and then post-charge off, we've gone through various solutions. And I think as the relationship with TrueAccord started, it initially started off as let's test and learn, and let's grow out and see how the solution works. And from there, it's been a partnership that we've worked on. So I think through either chatting through how performance looks or through various solutions that are coming up through some of the newer tools and solutions that TrueAccord has come up with, we've tried to get ahead and pilot some of them. We've worked together and understand how our customers respond to those. And from there, the relationship has grown. It's something that our sort of like analytical teams and our operations teams internally have looked at very closely and monitored, and then worked with TrueAccord's teams to understand from their end, and together collaborated in a way that understands how our portfolio responds. And from there, we've grown. I think we've looked at various solutions in the past. We've looked at various solutions early on and then later on after that. And I'm sure most of you consistently do this. But I think that's kind of what's gotten us here today.
I would say historically, we have started from post-charge off because we felt that we didn't want to compete with the internal teams. We wanted to prove ourselves first. And two, it felt like companies needed to get to a certain level of maturity until now we're big enough and we have enough brand recognition. People realize that starting with us makes sense. But say 5 years ago, it was easier if you had the baseline of having worked with a traditional collection agency to be able to compare and contrast what it's really like before we come in. But at the sales point, we're definitely expanding into the white label world and offering our technology earlier stream now that it's proven, now that more and more are coming to us and say, well, I could develop it in-house. And I mean, Affirm is in the forefront of like engineering talent and so on. I think some of our clients, some of the folks maybe on this call are a little bit more challenged from an engineering capacity perspective. And so you end up, even in your internal team, you have 5 different vendors for email, for text, for this, for that. And it's like, it's not in one data store and you don't know how to manage it. And we offer this overall solution that can solve all of those issues. So yeah, we're definitely expanding, and Affirm is in the forefront of that, of just thinking about how to use us together with other tools, how to use us dynamically together with other vendors, which is something that we love and is not very common. It's been a really good partnership.
Yeah, the one other thing I'll add is that, at least for my time at Affirm, as we've grown, I think one thing that we do, and I'm sure all of you do, is as you look at your portfolio, look at how large the portfolio is. At points within aspects of like various verticals you have in there, you look to see how material they become. And from there, you start to explore solutions based on the portfolio size as well. So as we've grown, as we've matured, and our book of business has gotten bigger and older as well, it's tailored how we think of the various solutions that we do have. It's not ever going to be static, right? So as your book grows and as your customer base changes, the decisions we make also kind of like change with that.
Great, thank you. I think we have time. There are 2 more questions. The first is a little bit of an add-on to what you were saying, how you were mentioning the white label, pre-charge off solution. And so Wes asks, does TrueAccord still think that charge off is its most effective use case? I think he means post charge off. And then has there been any pre-charge off testing between TA and Affirm? I think the answer is no. I think we're on your there, but
we are actively working with clients. I don't think specifically with Affirm, but we're definitely rolling this out. This is a very effective tool. We're seeing great results. And we're definitely starting with our clients who come to us and say, listen, I don't have engineering capacity. Can you just plug your technology in?
Nice, cool. So stay tuned for more on that and soon from TrueAccord. Let's wrap things up with this question about compliance. How you think about compliance while scaling collections. Mohad, I know this is something you and I have spoken about before. If you want to give your thoughts.
Yeah, I mean, it's such a nebulous field. First of all, in terms of regulatory relationships, I've recently been appointed to the Debt Collection Advisory Board for California's DFPI. The commissioner is Manny Alvarez, who was general counsel at Affirm, so everything's connected. Hoping to get back on the cab for the CFPB. So engaging with regulators is something that Affirm has championed as well. And we as well, you got to talk to the regulators and you got to educate and be in the forefront of what you do. In terms of keeping compliance, it's changing all the time. So you got to have the right team in place. You have to have properly staffed teams to respond to changes. You have to be able to identify incidents and respond quickly. No silver bullets, a lot of lead bullets and a lot of operational excellence and tuning.
Great, which is, another reason to think about partnering, right? If you're looking to scale, having a partner who already has experience in and a great legal team. Well, I think that is it for the questions. I want to thank Ohad and Sahil. Thank you so much. This has been a really interesting and inspiring conversation. I want to thank everyone for joining, and we'll see you next time.